Good day, everyone. Welcome to the weekly note of GTC Traders. This is a feature we do each week, as you can tell if you click on the little category for the GTC weekly note. This is something that we do each week. If you are new, I am the senior partner of a separate private proprietary firm, and we decided, hey, how about we put our weekly note up? We're not by any means the only one that does a weekly note. This is something that's very common among many firms, weekly note or a daily note. And we thought, hey, how about we just make this real easy on ourselves? How about we just copy and paste sort of our weekly note from our private proprietary firm and put it over here on GTC Traders. So that is what we do. And the article itself has all of the vagaries usually of different thoughts as far as the economic calendar for that week and what we see in interest rates and various markets. If you're sort of curious about a weekly note, if you go to the GTC Traders YouTube page and you look at something like the playlists, so you click over at the playlists, come down here, go to the GTC weekly and daily note playlist, look at the full playlist. The first three, maybe even the first four videos really describe why so many firms do this. Okay, so why so many firms have a weekly and a daily note, really what is the value of a weekly and daily note, what it is and what it is not. So that's just for folks who are new. And then, as I will now, I usually yabber on about the vagaries of each week. So welcome to the weekly note for this week. Right now it's December the 19th, 2023. As I had mentioned, the wife and I sort of took off and just sort of threw everything in a weekend overnighter bag and took off for a couple of days to Chattanooga. We visited the battlefield of Chickamauga, toured the entire battlefield, toured Lookout Mountain. We're history nuts. We like that sort of thing. But we're back now. And it is December, right? So it's like, and if I'm a day or two late on the weekly note this week, it's not going to really be that big of a deal. So anyways, we are back. And just a couple of highlights this week. Again, I'm still in that mode where I'm just sort of letting the week, sort of slow down. Here we have a chart of Costco. I've been asked by people before, because I'll just let you know, Costco is an equity income piece, right? And people are like, really? Costco? The yield on that thing? Well, this is sort of why I have Costco. I'm a firm believer in building a sound program that has different pieces doing different things. Okay? Here, it's very obvious price appreciation. Costco is one of those beasts that just does not slow down. We've got that in the GTC sample portfolio now. The hardest problem I've always had with Costco is when can it slow down enough for me to make a sensible purchase. That is obviously not right now. If there's one thing I've learned in nearly 30 years of doing this, is now is not when you buy. So we're enjoying a nice rally. You know what you do with the course of action you do if you're somebody that has longer term holds and you're just letting something run? You know what the course of action is? You let it run. It's a long-term hold. You just let it run. Same thing here. We have Wells Fargo. Again, now is not the time to buy if you're looking at banks at a long-term hold with what we just experienced. And as I've told you, I've been looking at the credit default swaps. I haven't looked at them here in a little bit, but I look at them every few weeks, and nothing was really popping off to me. So with that and the action that we got in the yield curve, banks made a lot of sense to me. So Wells Fargo got thrown in there, and yeehaw, we're running higher, right? The only other couple of things that I would highlight, this is the spiders. We sold a call, I think a 483 call in the GTC sample portfolio because we've been selling calls. We got this delay. The last I looked at it, I think the probability of profit was something around like 95%. So until that drops to like 65%, I barely even look at it, but maybe once a day. And Alcoa, looking over at Alcoa, same thing. I sold that put, that naked, well, it's actually what it is it's a cash covered put, because my thought process on Alcoa is with the news that came out of FOMC and everything else, sort of industrials should be doing well. And therefore, I don't care if I get assigned. And, so in that case, you don't try and spread it. You don't try and do a strangle. You don't try and do anything like that. In that case, I'm just going to sell puts. Unfortunately, I fat-fingered it and sold them much too far away, but it being December, and I got so little, I was like, screw it. I'm gonna keep it there. So yeah, we sold puts. I think it was one put for the GTC sample portfolio, but selling puts in Alcoa, and I think the last I looked at this one, it was something over like nearing 99% probability of profit. So we just let it run out, right? Just that's been the theme as of late. We've just been letting the clock run out on a lot of these, on our longs as well. So we've enjoyed our longs, and then 2024 is when we're really going to be looking to get into it and to bang out some more short-term trades here. But that has been what it's always been for now. That has simply been our thoughts, not yours, for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.